Welcome to the Private Practice Survival Guide podcast with your host, Brandon Seigel. I'm a published author, speaker, entrepreneur, and private practice strategist dedicated to transforming the way that healthcare functions. This podcast is all about empowering you to create the change you want to see. Let's dive in. Welcome back to the Private Practice Survival Guide podcast. Thank you for tuning in. Today, we're going to be talking about strategies for negotiating insurance contracts. Now, I have to tell you, I recently came across a private practice. They've been in business for over 20 years. And I asked them, when is the last time that they received an increase to the reimbursement? And some of you may relate with this. They said, Brandon, never. I said, okay. Has your rate changed at all? And they said, yeah, we did have a reduction. I'm like, okay, so 20 years, your rate went down. What have you done about it? And they asked me, they're like, can I do something about that? I said, have you even requested a rate review? And they said, I didn't even know that was a thing. So if you're listening or watching today, I want to let you know that you can't get what you don't ask for. So as we look at the insurance reimbursements, we understand that it's hard because we have no control. We're the effect. So the biggest way that you can not be the effect is not be dependent on insurance. That's just the hard truth. But today, I want to talk about some strategies of how do we reach out to the insurance companies? What do we say? What's our call to action? What do we do if they say no? What do we do if we don't hear back from them? All those different things, because at the end of the day, no money, no honey, right? We need to figure out how to bring revenue in. And I think one of the challenging things that a lot of you are struggling with today is this challenge of, I'm a purpose-driven private practice. I'm trying to do good in this world. I'm purpose-driven, and I want to make my care accessible. And by the way, I want to make money too. Now, I want to be crystal clear. You have every right to advocate to make money. This is the only industry that I've come across where people feel guilty to use the P word. The P word is profit. Literally, if I go to a patient and I say, hey, you owe $25 copay, and they say, you only care about money. No, I'm just trying to keep the lights on. And so I think we have to retrain our staff, we have to retrain our patients, and we have to retrain our insurance contracts. And part of our job is explaining the value of what we do. What is that ROI? So when I'm negotiating with insurance contracts, there's several ways that I'm going to negotiate with them. But I can't win the battle if I don't know what's in it for them. So before I start a negotiation, I need to ask myself, what's in it for the insurance company? How do they financially benefit? See, here's the deal. They're going to make money. And you may make their clients happier, but they've got the monopoly. So it's so important as you look at this game. And this is a game. It's a game of insurance. It's a game of barriers, boundaries, challenges. And I want you to think of this negotiating insurance contracts. It's kind of like an Ironman race. You're going to swim. You're going to run. You're going to ride a bike. You're going to feel exhausted. You're going to want to quit, and you don't know when it will end. But if you have the right strategies in place, you've collected the right data, and you know how to formulate a call to action, anything's possible. So let's start with why insurance rates never go up. Okay? First thing is, providers are still accepting reimbursements. That's just the bottom line. If your neighbor accepts that reimbursement, I'm sorry, you're not going to be able to negotiate because they're taking that rate. And so it's really critical that you understand that providers, now this is not legal advice, so please seek out your lawyer. I'm giving a disclaimer here, but providers have to also have a standard. And every time we work for nothing, we're not just hurting patient care, we're hurting our entire industry. And so we need the ability to advocate as a group. We need the ability to figure out how to come together legally and showcase the ROI, return on investment of what we do. The other reason why insurance never goes up is it's a complex system, plain and simple. It is complex. We don't know. It's not black and white. It would make our lives so much easier if it was, hey, do A, B, and C, you get paid no matter what, 100% just focus on patient care. But that's not the case. It's very complex. So we have to advocate. We have to legislate. We have to get squeaky. Recently, I had a client, and a lot of practices were struggling with this TRICARE East, TRICARE West dilemma, and they weren't getting paid. And all of a sudden, providers started getting squeaky. And they were amazed with when they went on LinkedIn, when they went on social media, when they shouted from the rooftops, someone actually listened. They got to the top. Their EFTs started getting paid. All of a sudden, everything started coming together because their voice was heard. Sometimes we're stuck complaining to each other and we're not doing anything about it. So another reason why insurance rates never go up is policy and legislative challenges. So you have to recognize the insurance company is a business. That's the thing people don't understand. There are two areas, in my opinion, in this world that society just doesn't recognize. One is that our university system is a business, and the other is that healthcare insurances are a business. And I bring both of those up because they're creating part of the challenge that we face right now. Think about it. If insurance could not make profit, would it look different? 100%. I remember not too long ago, Blue Cross of Michigan was advertising how many multi hundreds of millions they made in profit. They're in the business of not getting people well. They're in the business of leveraging that the premiums will outweigh the cost of services. So we need to have policy and legislative challenges in place where we're challenging the way that money is spent. One of the businesses that I have is a state-funded company. There is a requirement of how we spend every dollar that we get. These are all parts of policy and legislative challenges. You want healthcare to get better. You want it to be more accessible. The hardest problem is this: accessibility of care and quality of care. They challenge each other because the higher the quality, the more money something costs, typically. You get what you pay for. So that means that if we use the analogy or the statement and we believe it, you get what you pay for. So if I'm paying $20 for healthcare services, would I get more if I spent $500? That would mean that I'm going to get more quality the more money I spend. Accessibility is about people being able to access. And so part of our private practice challenge right now is that we're literally locking horns. We're not recognizing that in order to get to the next gear, we have to make a value proposition. We need to be able to say, hey, if I can get everyone in your healthcare beneficiary group to come see me, I'm going to save you money because we're going to focus on preventative care. What if I went to the insurance, I said, I will save your company on average $40,000 every 3 years in hospital bills if we can see your services at this amount. And this is the need, this is the why, this is the data, these are the case studies, these are the outcomes, all of that. If that was at our fingertips, would we be able to make a play? 100%. Here's the other problem: market pressures. We've got competition. We've got practice owners that are becoming practice owners because they want to create their own job for themselves. And honestly, they're basically like, hey, I want to create a business and I can see 10 clients and it makes more sense than me being a W-2. We're seeing a lot more competition. However, we're also seeing private practice owners struggle. So we're seeing more sole proprietors, or we're seeing private practices getting swallowed up by the big dogs. And the big dogs are usually private equity-backed companies that are taking on your practice. And then patient access. Patients are having trouble understanding their benefits. They're either overutilizing it. They're not understanding what their insurance looks like. And it's a problem. And then obviously we've got political pressure. I'm not going to say left, right. I'm going to just say that we have two polarizing perspectives, and those polarizing perspectives are pulling apart our country. From socialized medicine to a free market to cash pay everything, I think we've lost our identity. So, first tip for you. Are you ready? I want you to define your identity. What is your role? What is your role in healthcare? What is that differential between accessibility and quality? How do you combine both and make it sustainable? And what is in it for the insurance company? And you can't just say, oh, your patients will be happier, your patients will get better. That's qualitative. That doesn't mean anything. They're looking at dollars and cents. You need to be able to show them that they will save millions of dollars because of what you do. Millions, not $10, not $50. You need to be able to turn water into wine. They're as corrupt as a stock market. I hate to say it. I know that might be controversial, but I'm being very transparent. They want to make money. They make money by two ways. One is increasing subscribership. Two is underutilization in ratio to the premium. And I want to say that again. Underutilization in ratio to the premium. So, have you ever read that book, The Giving Tree? It's so funny because I live off of this book. And if you've not read it. Read it to your kids, read it to your patients, read it to your staff, read it to everyone. I'm going to give you a couple, we'll just say precursors to what happens. The whole book is about this little boy that turns into a man that grows up literally taking from the tree. Let me take a branch from the tree. Let me take a leaf off the tree. Let me take the stump from the tree. And the tree dies. The tree dies because that kid that grew up to an old man never once thought, how can I reseed and grow this tree? In order for us to sustain growth, we must be able to lay a foundation of growth. If we pay $1,000 a month in premium, $12,000 a year, they're expecting that they're going to pay less than $12,000 a year. There's no magic investment where you magically can turn $12,000 into $100,000 of patient care. So you have to recognize their game in order to play your game. So we need to identify our value proposition. Very important. And I talk about this through quantitative analytics. Quantitative. What's quantitative? It's numbers. We got to look at all the data. So one of the things I like to do is I like to take your profit and loss statements. I like to go into your EMR. I like to collect all of your patient census data. I go into your bank account. I cross-check it with your QuickBooks or whatever you use. And the goal is that we define not just the quantitative analytics of money, but then we go into your EHR, your EMR. We're looking at clinical outcomes. We're looking at our expense analysis. We're doing a market study. We're doing supply and demand. So I'm going to give you an example. I have a doctor in Texas that makes 30% more from the insurance than Los Angeles. How many of you are like, there's no way, Brandon, because it's more expensive to live in Los Angeles? Guess what? They have a greater supply and they are able to pay less in Los Angeles. They don't care what your costs are. They don't care what your expenses are. What they care is, are they doing their obligation to get the services delivered so that your patients get the bare minimum of medical necessity? And I know I'm coming hard on insurances, but they are in it to make money. You got to go back to that giving tree. You got to be able to understand how to gather your data so that you can say, this is the way that I grow your tree. So let me give you an example. I once negotiated with United Healthcare, and I was able to see a patient care census. And I looked at the census and I found that diagnostically, they had the data where I could see I was discharging clients for acute care in a less visits than all of the regional average. So they were able to see the standard deviation of visits to mine. And I was able to say that if you can increase my dollar amount, and they increased it by, it was 33% increase I got. Yes, I had a really good value proposition. And what I showcased is not only by this increase would I be able to discharge clients sooner, I would be able to also prove that they would not get readmitted for my services. In addition to that, I was able to showcase how all of the other providers in our region were just exhausting the benefit, that they actually were not deeming medical necessity being delivered, but they were exhausting a medical benefit. And by that, I said, by increasing my pricing, I would be able to open up more availability and would be able to serve your demographic, in which you would save money and create more value at the same time. Did I get the increase? I got the increase. It's all about having that data. The next thing is segmenting your audience. Identify your service delivery differentiator. You need to. And I know a lot of you are like, well, we all do the same thing. Well, look at your certifications, look at your scheduling, look at your location, look at the demographic of need, the expertise. Don't use qualitative, oh, we're good, whatnot. You got to be able to quantify your quality if you're going to use quality as a differentiator. Again, quantifying everything is the key. So how do I quantify quality? Well, I was able to say that I'm able to discharge your clients faster. And here is the data that proves that. I also was able to say what's in it for them. They're able to save money. My other differentiator was I had more specialties than any other provider in a 60-mile radius. So we were able to support a greater capacity of services than a sole proprietor. And that would actually save their client driving. That would save their client money. That would save them with wasted visits. And we were able to prove the ROI of what was in it for the insurance company. The next thing you got to do, so we talk about data, we talk about segmenting your audience, knowing your differentiator, what's in it for them. Then we got to come up with the key metrics. We got to discuss what are those KPIs. So you need to think like an insurance company. What's the number one KPI that an insurance company wants? I want to meet my medical necessity requirement in as little cost as possible. Plain and simple. And you got to look at big picture. So sometimes we're like, well, that doesn't make sense, Brandon. I need 36 visits. Yeah, but what else are you saving by doing that service? Looking at it through that lens is really critical. Being able to quantify that is so important. Having those metrics of, hey, we have the following sustainability. We are ranking the highest with 5-star reviews. Our net promoter score is higher than any other competitor. We've run the market study. We've been best in class with our discharge, our software, our utilization of outcome tracking. What are the things that we're doing, and how do we quantify metrics around that? Once we have that, we need to look at our competitor offerings. What are they doing? What's different that they're doing than you? What are you doing that they're not? Sometimes we even will come together where we'll say, hey, our competitors are actually, we're working together. We have different support valves that we can utilize to support the client. And so sometimes actually coming together, as long as it's legal, with our competitors to say, we've created this ecosystem. So these other companies are not competitors. We actually complement each other. We all need the same thing so that we can go after. And again, I keep using the legal concern because by contract, you're not allowed to unionize with other providers in most cases. So this is a very vague statement. A lot of you listening come from all different specialties. You need to meet with your legal team to understand your rights when it comes to what I call unionizing, which means that we're coming together in order to negotiate with insurance. That's a big no-no in most cases. So you just want to look at that. Once we know our data, our audience, our metrics, our competitor offerings, we're going to put that insight into a call to action, and we're going to communicate our value proposition. So, hey, after researching, I was able to discharge 30% faster than everyone else in the region. I was able to bring 5 different specialties. We were able to service an infant population as well as an adult population, all within the same sector, where we can support not just the child, but the parents and their own needs. We were able to create metrics where more and more patients were clinically showing greater quality of life, greater quality of function, greater health, less readmission to hospital or whatnot. Our discharges actually worked. We have all those metrics in place. A lot of our competitors in the area are not offering all of the specialties that we have. And therefore, we have come to the conclusion that if we can increase our reimbursement by $31, we will be able to discharge and serve more clients, and you will save as a result $35,000 a month at scale. Whatever that number is, you get where I'm going. So when we're looking at our rate review process and communicating, here are some additional strategies. You need to be transparent, and you need to have accountability. So there has to be a public justification. Whether it's a 15%, you got to be able to justify that. This cannot just be net profit. This can't just be, hey, my expenses are going up. There's a need. We have a huge wait list. We're reaching challenges being able to serve your public. And every day that a patient is not serviced and is on a wait list, the cost of care is going to be more on your book of business. That might be your call to action. That might be your justification. We need a 3% increase because of the following. The other thing is sometimes we'll engage independent reviews. So sometimes what I'll do is I'll actually contract with a consultant. Sometimes it's an MGMA consultant. Sometimes it's a AAPC consultant. We'll get an independent expert to review proposed rates and make sure that they're all justified, that they're reasonable, that we can really back it up. The next thing is data-driven analysis. We have to have accurate data. So a lot of you make assumptions or you don't have the right data, and that's why we have to cross-check our data between our accounting software, our EMR, our bank account, our payroll system, and really look at and verify that all of those costs and utilization are accurate. And along that way, I'm benchmarking. So when I'm measuring this data for negotiation, I'm looking at quarterly, monthly, and annually. I go monthly, quarterly, annually. I go both month over month, quarter over quarter, year over year. I also will look at a trailing. So what was the last 2 months, 3 months, 6 months to see those trends when I'm benchmarking it. The other thing that a lot of practices aren't doing is they're not getting consumer involvement. I think it's really critical that you get public input, that you allow for your patients and your public to give input, to talk about what's working and how much you've saved them and whatnot. And then we have to do consumer advocacy. We have to represent the interests of policyholders when we're going to insurance. For those who don't know, I live in Tampa Bay now. And in Tampa Bay, we've got a big hospital system. And this is the thing that hospital systems can do that most private practices are not yet able to do unless your legal team says you can. But they actually send out a letter to every single beneficiary, so every single subscriber, and they say, hey, we are about to go out of network with Blue Cross. You better be a squeaky wheel for us. And I've seen this done twice in 5 years, and both times it's worked. And so that's the other thing, is exploring that consumer advocacy. Hey, we're struggling with your insurance. Sometimes if you're dealing with an HMO managed care plan, the patients are actually the best resource. The patients are saying, hey, they're saying that they're considering going out of network. Can you please talk with them? Sometimes what we'll do is we'll go into a letter of agreement with an insurance company under a new rate to prove our value. And then based on that, they'll adopt that rate once we prove ourselves. So that's another thing. You want to be looking at your regulatory compliance, your state and federal standards, ensuring that you're compliant with all state and federal regulations. You want to make sure that you have an effective rate review with multiple stakeholders that are looking at this, because all of this will help you present to the insurance company. If you're struggling with this, there are a lot of resources out there. Like I said, AAPC is one, MGMA. If you need a specific referral, you can reach out, you can comment. I can, definitely let you know if I have any referrals or recommendations, but AAPC and MGMA are two that I utilize a lot, as their consulting model can consult on insurance rate review, negotiation, getting your data together. And here's the deal. Imagine if you budget $20,000. That sounds like a lot, but $20,000 of budget to get this dialed in, to get a rate that's going to change the trajectory of your practice, not just for today, not just for tomorrow, but for potentially years. One of my practices has been going off of 21 years in practice, and I think we're about to get our third increase in 21 years. That's it. So you got to take it while it lasts. The other thing you need to be looking at is continuous improvement. You need to show the insurance that you're continuing to look at ways to be more efficient, to be more effective, to define medical necessity. So one of the things, I keep using this word medical necessity. There are a lot of practices that are looking at the function of the patient, but they're not defining it based on medical necessity. Just because something is good for my health does not mean it's a medical necessity. It is crucial that when you are negotiating with insurance, you speak their language. Medical necessity, not patient satisfaction, not patient health optimization. It is medical necessity. It is getting them to a medically approved state of being. And I think that's really, really, really important. Other communication strategies I want to remind you about. You must be consistent. Clarity. We have to have clear messaging. Sometimes it's a matter of being clear and concise, but having that data as an addendum can be crucial. So sometimes it's a single 3-paragraph request and saying, please review the data. We've come up with a strategy that we think can be a win-win. Our goal is to continue to improve the outcomes of your patients in the most efficient and economic way possible. And our hope is that by reviewing our rate request, we can come up with a way that can help us cover some increased expenses while reducing your overall investment and expense in your patients, but creating better outcomes. You get my point. The other thing is multi-channel communication. Sometimes we need to use it. I said it earlier, emails, social media, phone call, print materials, whatever that takes, you got to look at that. Personalized communication. You need to tailor it to each individual. If you just write, "Dear Blue Cross, you're not getting anywhere. I do the research. I look them up on LinkedIn. I get recommendations. I start with my network management. I work my way up. I do personalized emails, but then I'll also send it certified via mail. I will also be truly a nagging Nancy. I will nag them phone, text, email, social media. And usually what I want is I want a response within 60 days. That's my goal. You can get it less, but 60 days is my absolute. We need to be transparent and we need to foster trust. This cannot be pay me more money so I can pay my team. This cannot be I'm losing my shirt and the only way that I can continue to serve your demographic is by this. What we just did when I said that is we told them your problem's not their problem. I say the same thing with employees. At the end of the day, they chose to take on student debt. Now, I have to be aware of it if they're a fit for me based on their student debt. But at the end of the day, insurance companies don't care if you're losing your shirt. All they care about is meeting their obligations to their beneficiaries at the lowest cost possible denominator. Educational content, the more that we can educate them, the more that we can show them how the costs are being managed, show them the way that we are evaluating our team, our internal review, and then getting feedback, showing our patient feedback, showing our employee feedback, showing our referral source feedback. If there are other physicians that we see their patients, those are things we want to keep into account. So it is crucial when we attack the insurance reimbursement approach that we are attacking not just the insurance company in what is in it for them, but we're bringing into account the satisfaction, but also the quantitative outcome and money we are delivering on behalf of their consumers. And that we tie in our commitment as a company to our community and how we are serving an underserved community while saving money for the insurance company. So I'm going to give you a couple quick reminders, and then we're going to get into our statistic for the episode and our quote for the episode. So bottom line, why do insurance rates never go up? This is the real truth, because too many people are willing to accept their crappy rates. You need to be able to walk away from an insurance company sometimes in order to get that higher rate. But be careful. Some don't care. I went through a negotiation with UHC and I was successful. I went through a negotiation with Blue Cross and no joke, excuse my French, but they flipped me the bird. They could care less. They said we would rather our patient census drive 50 miles than give you a raise. In a nice way, that's what they said. So we have to know who we're playing with. We have to identify our value proposition through quantitative analytics. Give them the numbers, give them the money, give them the outcomes. And then you need to put together a rate review process, ideally with a third party that does analysis that shows that your value proposition that you're giving them is not just through your lens, but through an expert lens, because that expert lens is going to help bring an unbiased opinion, ideally, and that they can show data that backs it up. So statistically, did you know a modest 2 to 3% increase in reimbursement rates from a major payer can result in an additional $500,000 in annual revenue for a medical practice? This was from Medical Economics. I'm going to say it one more time because it's crazy. We all are going off of 10%, 15%, 20%. No. A modest 2 to 3% increase in reimbursement rates from a major payer can result in an additional $500,000 in annual revenue for a medical practice. Now, there's one other thing I want to remind you of before we end off. When insurance reimbursement goes up, so does your patient responsibility. So I want to be crystal clear. If someone has co-insurance and they're paying 30% and you get an increase, let's say from $100 to $200, I'm just showing you the example, their copay is going up by that same percentage. So just as you want accessibility, recognizing that there is a point where someone's insurance company is actually not helping them, and they need to seek out alternative measures too. So, our quote for this episode: negotiating group plan rates is a complex yet essential aspect of managing healthcare costs for employers. Dissent. I'm going to say it one more time. Negotiating group plan rates is a complex yet essential aspect of managing healthcare costs for employers. So the bottom line is this: we need to make sure we're negotiating it on behalf of our patients, on behalf of our employees, on behalf of our country, our community, etc. Bottom line, there is a lot of opportunity here. I really think that if you can seek out the support you need to get quantitative, non-emotional data, you will be able to thrive and not just survive. I want to thank you for joining us today in the Private Practice Survival Guide podcast. I want to please don't forget, like us, subscribe, listen to us on all the podcast streaming sites. Go to YouTube, comment. We review the comments. We are here for you. We care. And I just want to thank you for being on this journey with me of the Private Practice Survival Guide podcast. Thank you for tuning in to the Private Practice Survival Guide podcast. I'm incredibly grateful to each and every one of you. Exciting news. We're now available everywhere, from Spotify to Apple Podcasts to YouTube or anywhere you like to listen to your podcasts. So watch, listen, and reach out. If you love this episode, please drop a 5-star review. It truly means the world to me. Are you looking for more ways to elevate your practice? If so, now is your chance. Reach out, go to my website, or email me at brandon@wellnessworksmp.com. And remember, it's not just about surviving, it's about thriving.